Let's welcome Dhananjay Sinha of Emkay Global Financial Services. Dhananjay, hi, good morning.
Hi, good morning.
How much of the election verdict has been priced in by today's reaction to exit polls? And if on Monday we have something similar, do you think markets will react more, or has that been priced in now?
I think mostly it is priced in. I think if it is a 4-on-4 for BJP, there might be, if I'm talking about Nifty, there could be about 50 to 100 basis point up move from current levels. But I think mostly it is baked in to the price.
Okay, Dhananjay, hi. Thanks very much for joining in this morning. What about global cues? Because we do have the non-farm payrolls data that's out from the US tomorrow. How much of importance would that hold for the markets, or do you think that the markets would be focused more on something as domestic as the elections?
Yeah, I think from a fundamental standpoint, what the Fed does is very important, and I think the strengthening momentum as far as job data in the US is concerned is actually strengthening the case for QE tapering happening somewhere around January or somewhere around that time. I think that will be significant from the market standpoint, especially the currency and the equity markets as well. So I think that's very important. But I think at this juncture, the election fever is very much on. And I think the market is kind of pricing in a lot of optimism in terms of the results that may come through that. So I think the first semi-final, which is the state election result, which is due on Sunday, I think that's something that is kind of playing on the minds of the investor by and large.
Sure.
But I think more serious issues are relating to what happens to the QEs, and I think the job data and the GDP data in the US will be important. I think even in Europe, I think the economy is actually moving out of the recession. So I think from a global liquidity standpoint, I think we'll have to see how the liquidity cycle pans out after that. But I think the case for some amount of neutrality in monetary policy is actually improving.
All right, let's pull out the stock of Jubilant Life Sciences. By the way, it was woke hard 2 days back, and it's Jubilant today. US FDA has issued a warning letter to manufacturing plant in US, and the stock is down 7% on that. Any first-hand comment, or not yet?
Well, you know, Anuj, the only thing I think that stood out in my mind are there are three instances, this being the third instance of a warning letter by the US FDA, so that's become much more prominent. You spoke about walkout, despite the fact that there was a Form 483, so there was a high likelihood that's going to happen. But even for Jubilant Life Sciences, I would have to check on whether or not this is the second US FDA warning letter they've received, and which facility they're talking about. And not to mention that we did have news from Strides earlier in the morning that the deal with Agila, with Mylan, is completed on Agila, but again there is a caveat that they could hold back $250 million, and that would be on account of the warning letter. They have an additional expenditure of around $150 million with regards to that warning letter. In fact, let's pose that question to Dhananjay. Dhananjay, we've heard a lot about, say, Walkhard, now Jubilant Life Sciences, Strides, all being threatened by the US FDA warning letters more than what we've seen earlier. Would that be a concern in terms of the pharmaceutical stock valuations that we could see going forward?
See, I think from a structural standpoint, I think these developments are actually good. In a sense that if there are lapses, I think these events would actually over a period of time improve or set in place best practices within the pharma space. So I think from a long-term standpoint it is good. I think with respect to the pharma space in general, these are very case-specific events. So I would not really extrapolate this to have to our view, which is positive on the pharma space. So I think that's how I would look at that.
Okay, this of course is a BSE announcement from Jubilant, so quite clearly there's a big reaction on the stock, 7.5%. In any case, it's been a very volatile stock. If you see, it had a massive correction. Then there was a buy report from an influential brokerage, which led to a big surge in the stock price. If you see the 6-month chart of Jubilant Life Sciences, and today that it's got a bit of a knock, down about 7%.
We should actually find out, Anuj, which manufacturing facility they're talking about, because they had received a warning letter, an FDA warning letter for the Canada plant all the way back in Feb 2013. So we need to have some clarification on which plant they're talking about and whether this is a completely different plant or whether this might even be a follow-up for the Canadian
It's located
plant.
in Washington State.
Okay, so then that is definitely a second plant which has received a US FDA warning letter in the span of 1 year.
This plant contributed 7% to their consolidated sales in first half, and the stock is down 7%. So sometimes markets have the habit of correcting by the margin that they require, but 7% lower on that stock. Let's move on then. Dhananjay, the big sector of the day-to-day, of course, is banks, being high beta in nature. How would you be positioned on stocks like, say, ICICI Bank, HDFC Bank, and do you think they're good for more?
Yeah, as far as the banking sector is concerned, we have been underweight, and that's largely because we have a negative view on the PSU banks. In the current context, and also from our portfolio standpoint, we have been positive on private banks. So the picks that we had chosen were ICICI Bank, HDFC Bank, and now we like Axis Bank as well, along with LIC Housing. So the thing is that if there is certain optimism that is there in the market, and if the cyclicals do well, we'll rather like to play it through these names. So rather than going whole hog into the banking space and also picking up the PSU bank. So I think that's how we place it. We believe that the PSU banking space would still have to grapple with the asset quality issue and recapitalization issue. So I don't see that happening in the foreseeable future. So I think that's how I will play the banking space.
What is your expectation from the winter session, if any?
I think the winter session will happen amidst a lot of political volatility, if that's the right term to use that. But there are certain bills which are there, but I don't expect too much of events in the winter session. I think it will be more as a preparatory work towards the 2014 election. So I don't think big reforms, etc., will flow from the winter session.
All right, Dhananjay, thanks a lot for your time. That's the view from Emkay, saying that most of the positives from election at least may have been priced in. If it is 4-0, maybe Nifty rallies another 50-60 points, but that's it.